Hey everyone, I wanted to put a video together comparing the cash flow from ExxonMobil to Altria. And I understand that comparing these two companies, they're not in the same industry, so why does that make sense? Well, I wanted to compare two companies that, had what many consider to be industries that have products that are going to be declining over the next, couple decades. So you think about oil and tobacco, both of those are forecasted for consumption to be declining over the next, again, several decades or over the next century. And with that in mind, I wanted to say, okay, if we model out their free cash flow and we take a look at their history first, we take a look at some projections, which company would stand up better to a declining free cash flow rate? Okay, and what I mean by that is that, hey, even if some of these companies are actually going down as far as how much cash they're able to generate, do either of these companies still represent a potential, good investment? Because both of these, when you look at them, actually are paying, a really strong dividend. ExxonMobil is paying a dividend of over 10%, or in that neighborhood with their current share price. Altria is, kind of around 8 or 9%. And I know their stock has been a little bit more volatile lately. So again, both have strong dividends. You can also think about those in terms of how stable those dividends are. And I think certainly that, from a lot of different perspectives, that Altria's dividend is safer than ExxonMobil's. ExxonMobil is, trying to, I think, primarily, at least in the short run here, trying to fund their dividends, with debt, which is not going to be a sustainable solution. Whereas, at least with Altria, their volume, of tobacco products is decreasing, but they have enough pricing power where they've actually been able to hold up pretty well on the revenue side of things. And again, as we'll see, even with the cash flow history. So to start out, I want to kind of just show some of the trends going back from 2012 to 2019. And these are the free cash flow trends. And just a reminder that free cash flow is really a representation of the cash a company is generating that is going to be available to shareholders. And that is one metric and one way that you can start to value companies, is looking at how much free cash is available to investors. So again, one perspective. I know that in past videos I've actually focused on some companies modeling out revenue growth more than free cash flow. And I think that it really depends on the stage you are in the life cycle of a company. So an earlier, company or a growth company, like a DraftKings, is going to be something that if they're not profitable yet, it might make a lot more sense to look at revenue trends and try to look at price to sales and things like that. Whereas again, if a company's stable, and been around, it might even be in the decline phase of their life cycle, it can make more sense to maybe focus more on either earnings or free cash flow. So we have two graphs here. The top graph is just going to be the free cash flow per share per year. And then underneath of it, I'm going to include here a 3-year moving average just to kind of smooth that out a little bit for us. And with the moving average, that's just saying that, in each of those years, it's looking at the average of the prior 3 years in that data point. So 2014 is going to be the average of 2012, 13, and 14, whereas 2015 is going to be the average for 2013, 14, and 15, and so on. And when we kind of look at these two, we see that, they're not that dissimilar. In fact, the average for this time frame from 2012 to 2019, Altria's free cash flow per share was $2.73. ExxonMobil's was $2.63. So the average is only off by a dime. But when we do actually look at the 3-year moving average, we can see that Altria has kind of had, since about 2015, 16, they've kind of pretty consistently been, doing better than what ExxonMobil has been doing. So they're kind of, I think, have a little bit more of a favorable positive trend. And this is just through 2019. And this trend, I think, actually even got better when you start looking at 2020, just because, again, Altria's business holds up much better compared to what oil has been holding up with shutdowns and things like that. So again, this is the historical perspective, but now what I want to do is I want to go ahead and take a look and say, what if I assume that both companies follow the same trajectory, or the growth and decline rates in the future? So what do I mean by that? Well, let's take a look at the first scenario here. So in scenario one, I'm going to be saying, assume that their free cash flow is going to grow in the short term by the exact same percentage amount. And I'm first just going to kind of, for simplicity, I'm just going to say, hey, I'm going to take the average of the last 2 years of free cash flow. And then I'm going to say, from that average, what if we assumed the same percent short-term growth? And then let's assume that, from 2025 through 2030, that they basically level off their growth. And then after 2030, they start to steadily decline in terms of the free cash flow that they're able to generate. So as you can see, over the long run, this is really showing that both companies would essentially be in decline, mode. So certainly not saying that there would be either growing or be able to sustain their business models long term. But what gets really interesting is that if you actually discount all of these cash flows per share here, if you were to discount all of these back to present dollars using a 9% discount rate, you'd actually find out that based on this scenario, that Altria would be worth $42.20, whereas Exxon would be worth about $25.68. And this is actually going to be the most optimistic scenario that I'm going to be kind of modeling out. But let's go ahead and take a look at the next scenario. I've got 3 of them total. Okay, so the next scenario, again, there's still the short-term growth for both of these. And again, I'm just to standardize this, that's kind of the purpose, was to say, hey, just apply the same short-term growth, long-term decline. So the same percentages have been applied to both based on their historical cash flow. But in this case, we're going to be, a little less optimistic about their ability to sustain their cash flow for a longer time period. So all we're going to do here is just say that their cash flow is essentially going to fall off a cliff a little earlier than what we had projected in that first scenario that we just took a look at. And in this particular case, we would, again, discounting the cash flow per share, and these are all per share as well, but discounting that, you would find at the 9% discount rate, you would come up with Altria being worth $39.26 and Exxon being worth $23.89. And then I've got one more scenario for you guys. And the last scenario is, just a pretty steady decline. So again, we're going to take the average cash flow for the past 2 years and then say that they're just going to steadily decline as we kind of go through time here. And if it was going to follow a trajectory similar to this, which again, I think is, obviously a pretty bearish case if you're just expecting every single year they're going to steadily decline and have no up years at all, you would still find that even with this projection, that Altria, their discounted value of these, the cash flow here would be $37.32, and Exxon would be $22.71. And then just to recap all of that, if we come over here, I put together all 3 scenarios, and when we look at it, so again, we have the third scenario, which is going to be the worst case we looked at, scenario 2 and scenario 1. And then what's interesting, of course, is like at this point, we can start to ask ourselves, well, what are the stock prices currently trading at? Well, if we look at Altria, they closed as of Friday. So what was that? It would have been October 30th. They closed October 30th, 2020 at $36.08. Exxon closed at the same time, $32.62. And so when we look at all these scenarios here, if they were to follow the same trajectory, of all these different scenarios, well, Altria would actually be worth more under all the scenarios that we modeled out they'd be worth more than what they're currently trading at. Even in the most bearish scenario that we just walked through, they'd be worth over $37 a share, whereas you can currently get them for $36. Again, at least as of the close, October 30th. Whereas Exxon, even in the most optimistic case that we can model out, they would be worth $25.68. Now, that being said, I think that what can be interesting to think about, and this can be a good thing to keep an eye on, is that, if ExxonMobil, again, we talked about that they're funding a big part of their dividend payment with debt. There's been a lot of speculation out there if they're going to be cutting the dividend, either cutting it completely or just reducing it. And if they do end up at any point in the next year cutting the dividend, if the stock ends up getting beat up because of that, and let's say it falls down below 25 or it falls down below $23, $22 a share, it could be interesting to kind of keep this in mind and to think about, hey, maybe from just a free cash flow perspective alone, irrespective of the dividend, maybe ExxonMobil does start to eventually pop up as something that's actually, in the buy range. Okay, so again, this is, wanted to walk through this. I think to some extent that this can kind of oversimplify things, because again, I'm just looking at the last 2-year average as my starting point for the cash flow. But again, just wanted to model out some different scenarios. I thought this would be interesting, just for my own education, and I wanted to share it with you guys as well. And as always, just a reminder to do your own research and, check these numbers, all of that good stuff. So don't just listen to a YouTuber, however much of an expert they may appear to be. Always make sure that you're investing for reasons that make sense for you and your investment profile, your risk tolerance, all of those things. But anyway, hope you guys took some value out of this video, and let me know what you guys think in the comments below. And talk to you next video.